shall not crucify mankind on a cross of gold. The scene is the Democratic National Convention, Chicago, Illinois, 1896. William Jennings Bryan is delivering a speech to the convention. He is running for the presidential nomination on the Democratic ticket. He is in sharp opposition with Democratic President Grover Cleveland over the issue of gold and silver. The U.S. has been on the gold standard since 1873, of which President Cleveland strongly supports. On the other hand, there are the silver advocates who are a strong believer of the minting of silver. At one time, we had a bimetallism system in this country of both gold and silver. You could take your gold and silver to the mint, and they would mint it into a coin. In 1873, we went totally on the gold standard, and easy money advocates who favor silver were very upset. And so this was the reason William Jennings Bryan gave his famous speech, "Thou shalt not crucify mankind on a cross of gold." He got the nomination, but he lost the election to McKinley. Money has been in the news a lot recently. For example, on May 28th of this year, Governor Ron DeSantis of Florida announced that he was signing a bill that would legalize gold and silver as legal tender in Florida as for debts effective July 1st of next year. On February 3rd of this year, President Trump announced the creation of a sovereign wealth fund, which would include, gold and possibly Bitcoin. Bitcoin on that news soared to $100,000, reaching new highs. Incidentally, the idea of a sovereign wealth fund is not unique to Trump. Other countries have them. In Norway, for example, a small country, has one of the largest sovereign wealth funds in the world, $1.7 trillion, which I have read includes some Bitcoin. The mayor of Miami, Francis Suarez, gets his salary in Bitcoin. And finally, boohoo, on May 23rd of this year, the U.S. Treasury has announced that they are going to cease the production of the penny because it costs more to make a penny than it's worth. It costs, say, 4 cents to make a penny, which is worth 1 penny, obviously. So after maybe, next year sometime, we may not see new pennies in circulation. Well, all this raises the question, what is money supposed to do? I mean, if something is going to serve as a money, what are its functions? So there are 4 functions of money. First of all, a medium of exchange. This is probably the most fundamental function of money. It acts as an intermediary for transactions. It allows individuals to trade goods and services that are unlike without the need for barter. The problem with barter is that it requires a coincidence of wants. If I make baskets and you raise tomatoes, I have to want your tomato at the same time you want my basket. But with a medium of exchange, we have a way of transferring the value of the tomato and the basket into a common denominator. So a medium of exchange. And the dollar works well at that. Dollar is accepted in many foreign countries. A unit of account, it's a way by which we can express a value, a common value in unlike items. For example, I have a way of expressing the value of my baskets in a way that can also be translated into the value of your tomatoes. In our currency, the dollar does well at that. It's a decimal-based system, and with multiple divisions and availability of coins and dollars, we can exchange and assign unit values to many, many different things, whether it's an hour of wage or a month's rent or a pound of potatoes or a gallon of gasoline or whatever it is. We have a common denominator by which we can equate various items. A store of value, which means that if we transfer some type of value into this third party, this money, we can spend that money later on, exchange it later on for something of comparable value, and we get value given for value and exchanged. We haven't lost anything over a period of time. The currency hasn't devalued or depreciated. And then finally, a standard of deferred payment, which very much is tied into number 3. If the currency or if the medium of exchange will hold its value over time, then we can enter into agreements where we can make payments over a period of time. I can buy something today for $1,000, but I can borrow the money and pay it back over a period of time, and the seller will get an equivalent value back plus any interest that might be appropriate. So these are the functions of money: medium of exchange, unit of account, store of value, and standard of deferred payment. Of these four, where the dollar is currently getting the most criticism is basically an item number 3, a store of value. As far as being acceptable, the dollar still is acceptable to foreign nations, as well, of course, used in the United States. In my recent trip to Costa Rica, which I reported on earlier, Costa Rica has its domestic currency, the colon, but they accept dollars, and we use dollars there. You have to watch to make sure you're getting the right exchange rate. It was a little over 500 colones to the dollar, and sometimes the dollar price might fudge on that a little bit. So you have to watch that. But nonetheless, it was acceptable. Interestingly enough, back in, let's see, when was that? We were in Cuba in March of 2019. The government there very much wants dollars, but they don't want their people to have dollars. And so when you go into the port of entry there, we were arriving by cruise ship. So when we got off board the cruise ship and went through the entry area, we had to exchange any money that we were going to spend. We had to exchange our currency for a special Cuban currency, which even the Cubans themselves did not use, but they could accept from tourists. But the tourists had a special currency. And I found out in advance that if you used euros, you got a better exchange rate than if you used dollars. So I took euros and I exchanged euros for the Cuban currency. So a little travel tip: if you're going to go to Cuba anytime in the future, you might double check that and see if there's still some type of dual arrangement between exchanges for dollars versus euro or some other currency. When we were, we were in Africa, and we wanted to go see the Victoria Falls, going into Zimbabwe, I think it was. Just to get into the country, you had to have $50 in cash, no credit cards, no checks, nothing, and U.S. currency. They wanted the currency in cash, and they didn't want as I recall, they didn't want the currency more than maybe 7 years old. I found this also in some travel notices with reference to Costa Rica, that they like crisp, recent dollar bills. They don't like old dollar bills. I've seen that several times in foreign travel. So the dollar is acceptable worldwide. Going to Europe, you're going to have to use the euro. It's very seldom that I see anybody accepting dollars there. I'm not saying it wouldn't work. And if you wanted to leave somebody a tip and you left a few dollars on the table, I'm sure they're not going to throw it away. They'll take it to their bank and exchange it. But the dollar is acceptable. But our problem is the dollar has been losing value because of inflation. And at this point, I want to take a look and share with you some insights on just what a low level of inflation can mean over a long period of time. Let's look and see what happens to a market basket of items of, say, $100 at a modest rate of inflation, 2% over time. Starting where we are now, $100, in 1 year, that market basket would go to 102. But in 5 years, because of compounding, it would now be $110.41. Inflation is a compound phenomenon. This year's inflation is on top of last year's inflation. By 10 years, $121.90. Notice that by 35 years, your price level has doubled from $100 to just about $200. If you're in your 20s or 30s and you're planning for retirement or some future big expense, your $100 basket of groceries or whatever will be double in 35 years. 2% is the Fed's goal, and they're not there. Closer to what we've experienced, in fact, our recent experience has been more than 2.5%, but notice here that by the time you've gone out 20 years, prices have increased by about 2/3. And notice by 30 years, not 35, but in less than 30 years, prices have doubled at a 2.5% rate of inflation, and that has been our experience. All right, we go to the Bureau of Labor Statistics, BLS.gov, which we've talked about in previous programs. And we look at the section for the Consumer Price Index for all urban consumers. And our graph here starts in 1983. Now, why 1983? Because as we can see, our base period is 82 to 84 equals 100. Now, what that means is that the Bureau of Labor Statistics gathered price data over thousands of items over a 3-year period, 82, 83, 84, and averaged these together, applied different weights to different items, and set that figure as 100. And then for subsequent years, that same market basket, the prices of which were then related to the base period to see how much prices had gone up. And you can see there has been a steady increase. There was a brief period of time in, 09 here, I guess, that prices dipped. But by and large, it has been a straight line going up, 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 up. And then more recently, there in 2020, we had a sharp increase in inflation during the COVID period. But I want you to notice here that from 1983, if we go out to a period of time when it reaches, say, like in 2006, it had already doubled. In other words, it didn't take until 2023 to double. Prices doubled in 23 years. By the time if we go up here to the year 2006, prices have already reached 200, which is a doubling from 100. So our historical experience is not good. We haven't even accomplished the 2.5% growth, much less the 2% goal that the Federal Reserve would like us to have. This is month by month data going back for the period of time to 1983. And as we can see, about the midpoint between their base period of 82 to 84, they're in the middle of the year of the middle period here. This is where our 100 starts here, from 99.9 in July to 100.2 in August. So here's the beginning. How long did it take us to get to a doubling of 100 to 200? Well, as we can see, by, say, August of 2004, we were almost there. 2006, 201.5. We had doubled 100 to 200 in that period of time. So you can see why there's concern about inflation. Our track record has not been good. It's not been 2%. It's not been 2.5%. It's been more than that. Well, here's the greenback. And notice in the fine print, upper left corner there, this note is legal tender for all debts, public and private. Translation, this is money because the government says it's money. It's not backed by anything. It's a Federal Reserve note. It's carried on the books of the Federal Reserve as a liability. We're looking at 2 silver dollars, U.S. silver dollars, United States of America. Interestingly enough, silver dollars do not say legal tender for all debts, public and private. It's not surprising. If anyone gave you a silver dollar, you would probably readily accept it. It's interesting, the coin on the left, which was struck in 2008, says on it, and you may not be able to read it, 1 ounce of fine silver, $1. Well, you consider that silver today is worth a lot more than $1. Needless to say, something like this is not in circulation. How about the Eisenhower dollar on the right side? There is no quotation there of legal tender, but it is money. It would be accepted as money. And there was a time when these things circulated. This was struck in 1971. It says $1. Here's a Kennedy $50. And this was struck in 1992. Again, you don't see these very often. Here's a U.S. gold piece. It states on it that it's a 1/2 ounce of fine gold, which means at today's gold price, it would be worth $1,700. Its face value, $25. When this was struck, an ounce of gold must have been around $50 because a 1/2 ounce was a stated value here of $25. Well, gold and silver and Bitcoin, for comparison purposes, I have a 12-month experience here going back to August of 2024 to August of 2025. Our first column there, the CPI, the Consumer Price Index. The August 2024 period is correct, 314.8. At the time of this recording, August 2025 has not been released yet. I'm estimating that based upon what we've had in May and June and July of this year. So that's an estimate that will undoubtedly change a little bit. But I don't think I'm far off. It's reflecting an increase over the last 12 months of around 3%, which is, I think, in line with most consensus estimates. Silver, those numbers are hard. A year ago, silver was $27.50. Now it's $37.10. Now, when you are watching this program, if you are watching this while the markets are open, that silver figure very likely has changed because it changes literally by the minute, sometimes even less than that. So the 37.10 was the time that I was putting this chart together, I think yesterday. Gold a year ago was around $2,500 an ounce. Again, I'm using August, which is a month. These things change by the hour, so it's kind of a monthly average around $2,500. Today, gold is a little over, at the time of this recording, is a little over $3,400. Again, when you watch this, it could be higher or lower. But bottom line, we've seen inflation go up around 3%. And we've seen silver climb almost 35%. We've seen gold go up almost 37%. And look what's happened to Bitcoin, 92.5%. And again, this changes literally by the minute. When I look on my Robinhood account and I check my holding of Bitcoin, just while I'm watching it, it'll be flickering up and down. So this $112,600 will undoubtedly be different when you watch this program. Yes, I confess I own Bitcoin. This is because I do. It doesn't mean you should. Please, this is not investment advice. If you want investment advice, you talk to somebody who you know and who's knowledgeable and who knows you. From time to time, I'll tell you, maybe I have bought something or owned something. I've bought gold and silver and so forth, but that doesn't mean you should. By no means are we giving investment advice here. Okay, but bottom line, we can see why there's so much attention to some of these alternate forms of money instead of the good old-fashioned greenback. So we need to keep this in mind. And gold is going to continue, in my opinion, to attach a lot, create a lot of attention. Bitcoin is going to be very much in the news as well. There's no doubt about it. People the world over are looking for ways to preserve value, whether it be in gold or silver or collectibles or Bitcoin or Solana or some other cryptocurrency. We're seeing a failure of fiat currencies all over and a distrust of them. And we've seen this here in the United States because the Federal Reserve has been very vocal about trying to lower inflation. But as we have seen, even if they lower inflation to 2%, there will still be a lifetime doubling We referred earlier to some of the coins like the Kennedy $50 or the Eisenhower dollar. When was the last time that you went through the checkout line and maybe you gave the clerk a $20 bill for some purchase and you had $1.79 coming back in change? When was the last time the dollar was a silver dollar? Or if they gave you a paper dollar and for the 79 cents, when was the last time you got a 50-cent piece? In your purse, do you even have a 50-cent piece? Or in your wallet or pocket, do you even carry a silver dollar? These coins are very, very rare in terms of circulation, although they have been minted fairly recently. They're not that old. And at one time they were in circulation. There is an economic law called Gresham's Law that explains this. And Gresham's Law says that that bad money drives out good money. Bad money drives out good money. For example, if we're going to be using the paper money, then we're not going to be using the silver dollar, because we would ascribe a higher value to the silver dollar or the metal dollar. It's not 100% silver, but there's some silver in it. We would ascribe a higher value to the metal coins than we do to the paper, and so we use the paper or the cheaper coins. Gresham's law: bad money drives out good money. Is our paper money driving out the good money? It's an important question. A previous report about the Fed, some recommendations on how to change and improve the Fed. I gave several. In this week's issue of Barron's, their cover story has to do with proposed revisions to how the Federal Reserve System operates. So I would call that to your attention. This is Merle Denbath, your optimistic economist.